Welcome to DNV Market Views, our videocast where we discuss the latest market developments. In today's episode, we will be reflecting on the past year, a year which by no stretch of the imagination was boring or uneventful. In fact, in my career, I cannot recall a time when changes appeared so rapidly, disruptively, or violently. And not to mention those disruptions that came almost out of nowhere, just to disappear into thin air as quickly as they appeared. Geopolitics certainly stole almost all the headlines. Trade wars, port fees, disruptions to international trade, IMO's failure to adopt the net zero framework were just some of the elements that kept us occupied, or, for people like me, sleep deprived trying to catch up with a constantly changing reality. A new world order, or the rise and the fall of empires, as my guest calls it, creates a very complex environment to understand. An environment in which shipping markets must find a way to function, adopt, and perhaps reinvent. And for a discussion of that caliber, I could not think of a better guest than my good friend, who I regard as one of the best shipping analysts, and with whom I have been privileged to discuss markets for more than I can remember. Christopher Pålsson, the managing director and partner of Maritime Insight. Chris has over 35 years of experience, which he has gained working for several well-known consultancy agencies before building his own company. I hope you will enjoy our conversation. My name is Jakub Walenkiewicz, and as always, you are watching the DNV Market Views. Chris, thank you for being with us.
Thank you for having me. It's a great pleasure to be here.
Chris, I'd like to have a bit of a recap.
Okay.
Because when we discuss, and we do it almost on a daily basis, but when you think about 2025, it was nothing ordinary about that year, and pretty much exceptional. And I think I'm not talking about exceptions in terms of sudden changes in trade, disruptions even. We've seen it before. This is what shipping is about. But I think we can't escape without mentioning politics. So what do you actually feel of 2025 in that perspective?
Well, quite a lot, actually. But, if you start thinking about normally, and I've been looking at these shipping markets for decades, in essence. I must be getting older, I take it. But anyway, trade and seaborne trade usually is pretty unaffected by these disruptions or changes in business cycles, etc. But this time around, it's been quite differently. I mean,
it wasn't.
Geopolitics, with everything that has gone on during this past year here, we've seen trade patterns change quite dramatically, and the who does what to whom has had a knock-on impact on pretty much everything that we trade with, to more or less extent, but still.
Well, that's what I also tell people, that as an analyst, you go out and you usually start your presentation with the supply and demand, just what we do. Yeah. That's what is expected. But this time, no, not really. You dive into geopolitics and try to guess, and which is really a tough one anyway, because if anything was extremely unpredictable.
Well, I'm a consultant. That's my profession to guess.
Exactly. That's our profession. But yet, somehow you need to end up advising people, and this is just not all that easy. But as you say, I mean, the geopolitics were always there. But certainly in my career, which is also quite a few decades already, and I don't remember one single time where we would have such a great influence on what is actually happening in our neck of the woods.
I mean, every forum that I've been speaking at in this past year, first of all, an unusual amount of the presentation goes into geopolitics, and 90% of the questions is about politics as well. So it's a big change. Normally, okay, what's going to happen to the iron ore trade or whatever, and what the drivers behind that, what goes on in China, and there's not for us normal questions, but now it's been very much different.
Yeah,
Middle East, Russia, Ukraine, and of course in the US, and each and every one has had huge impacts on
And not to mention the regulatory pathways and the green agenda. That was
Yeah.
all also hugely affected
Yeah.
a couple of months back. So, but yeah, well, I will push you a little bit about geopolitics, but before we get there, it's like, it wasn't a bad year, despite of all the disturbance, right? I mean, it's not like we, at least as of now, we don't have a major problem, right? We're still shipping.
Shipping is extremely apt to adapt to changes quite rapidly, and quite often manage to earn a buck or two in that process. You can go back half a century in history and you find numerous examples of exactly that. Closure of the Suez Canal and other disruptions that we've had over the years. And shipping initially quite often badly hurt and then recovers very rapidly and manages quite well, quite often. It is a business full of creative entrepreneurs.
Oh, absolutely. It's almost those disruptions. Well, not always, but to a large extent, they play to our advantage.
I mean, there are casualties in every disruption, but shipping is quite impressive in that respect.
So far, so good. Yeah. So we've had yet another year. Well, before we get into 2026, maybe. But then let's just stop a little bit, and then we'll go back to our geopolitical discussion.
Yeah.
Because obviously, now we have everything what is happening before our eyes, and what we argue often is that we change from a very bipolar world into a multipolar world where you do have those new players, those bigger countries, trying to take the bigger share of the world economy, and obviously to try to build a bigger picture around themselves, right?
Yeah.
And that obviously creates tensions, and then how do you actually see that? We were talking yesterday about those empires.
Right? Yeah. The rise and fall of empires, which sounds like the title of a movie or a book or something like that. But I mean, I just quickly scanned back through history, and that means several hundred years. And there are some common traits between the rise and fall of empires. Mm-hmm. One relates to the ability to build ships. Having a shipbuilding, control over shipbuilding production or output, both for navy and for merchant vessels, because control of the seas is very much part of becoming an empire. Losing that control is quite often on the list as empires start to degrade and vanish. Another one is that supports in a negative way the vanishing of an empire is government debt. Escalating government debt escalates beyond control. That usually, when that is being addressed, or the failure to cope with it, is usually one of the causes that contributes to the fall of an empire.
Well, then I need to ask you the question, because I mean, I wouldn't necessarily claim that even though the American debt is huge in terms of numbers, I mean, in relation to GDP, it's not all that bad. It's not pretty either. There is a problem. But then this, and compared to a shipbuilding, which obviously we know what is happening right now, is that something that American administration perhaps realized that, like, hold on, guys, we really need to do something about it.
Yeah, well, you can say whatever you want about the American current leadership, and we won't right now. But they have realized that the debt is unsustainable. I mean, it's not a good thing, So they need to do something, and what that something is could be, if they're doing the right thing. Let's not go into that at this moment. The shipbuilding part, they recognize that as well. And to be perfectly honest, the current output from US shipbuilders in the past 10 years equals the output of, in a day or a week in China. So there is an unbalance, to put it mildly,
Yeah. Well, yes, there is. And then, of course, it's not only lack of competitiveness. And I think we have John's Act over there, and things work differently.
I mean, you can start ticking the boxes on all the way what has led to this situation. Yeah. But
we are where we are.
We are where we are.
Yeah.
And if you are to sustain an empire,
Yeah.
then you need to have your control over your own navy. You need to have good access to the rest of the world, and
Frankly speaking, if you look at the map, you can only influence that much, over the land, and then you need to sort of get on a ship, right?
and there's no lack of ships. I mean, the output from first and foremost China and South Korea, the two dominating ones, I mean, it suffices. It only is a problem if you think it is a problem. If you think that you're being cut off, stand the risk of being cut off from that supply. Yeah. That's where the potential risk is.
Yeah. Yeah, absolutely.
If you perceive that as a risk.
If you perceive it as a risk, and if you think about shipbuilding now, I mean, this obviously is a huge incentive in the US to build, and some people laugh. Some people sort of pay closer attention to it. I mean, again, I wouldn't judge the initiative just yet. Certainly, there's something going on, and in my view, something will happen in the US in terms of shipbuilding, perhaps.
Already started, I would say.
Already started, exactly. We have several sort of initiatives, and the money is definitely flowing. But of course, what you need to do is to make it a lot more competitive than it is today. But that's if you leave the US, all of a sudden, it's not the only country doing this, because you've got pretty much the same thing happening. Well, not to the extent, but India is definitely trying to do exactly the same thing.
They have been trying for years.
Yes.
Not extremely successfully. I would argue, from what I can tell and see, that they are on a much more positive trajectory now, in that sense. They have a government backing. They seem to have a program in place. They seem to make progress. You see that the output from the shipbuilders is starting to pick up. Yeah.
You do see legitimate inflow of contracts to India.
Exactly, and you see the presence of the marine equipment companies in India. They want to be there now, and that sort of sustains that development. So something is happening there.
Well, and I hope so, because I mean, we've put a lot of hopes into development of India as a country. For many years right now. So.
Oh yes.
And you talk about the most populous country in the world right now, with immense possibilities, in terms of demands and needs, basic needs. Even if you talk about energy, right?
Yeah, sure.
So you do get the legitimate reason to do it, but it's not all that easy, because if you look at what happened in China, people quite often say it's like, oh, you had Japan, then you had Korea, then you have China, so naturally you flow into India. But not every country is the same.
No. I mean, the structure of India is quite different from that of China, So China is very much a production country.
Yeah, hyper-industrial.
Yeah, exactly. And India is more of an agricultural and service country, But that said, I mean, they need energy. I mean, there's a significant part of India that's still, shall we call it, under-electrified?
Well, to put it mildly. I mean,
And just to push that through requires quite a lot of investment, and it's happening.
Yeah. And I mean, energy is the backbone of getting people out of poverty.
Yes.
And getting on any development sort of path. But I mean, I told you that I built a little bit of a sort of a graphic representation on the energy per capita. You did it quite a few years back, and quite rightly, and to compare what do we actually consume per capita in Europe and the States, or let's say developed countries, and if you then throw it against average in Asia, and especially underdeveloped countries in Asia, or if you start with the sub-Saharan, I mean, this is incredible. So even if you only allow the population growth like we have from now, about another 1.5 billion until 2050. Yeah. And if you keep the assumption, which is obviously false, that no one's going to use more energy than we use today, you still get about 15, maybe 20% more energy that you need in 2050. Yeah. But then when you start thinking about that, those regions where you're going to get the most of this growth, which is sub-Saharan, which is still Asia. Yeah. Those are still developing economies, which for those decades, you have to allow them to grow, so the energy per capita will grow. And then you end up with 100% more energy compared to today.
Yeah, well, definitely. I mean, even though progress in growth in parts of sub-Saharan Africa is very, very slow, still the average, I'm trying to remember units and numbers here now, but I think that the average energy consumption per capita in sub-Saharan Africa is around 5
gigajoule per year.
capita.
Yes.
Yeah,
I remember the numbers.
and compared with the Western world, where we are in somewhere between 200 and 400.
50 times more at
Yeah,
least.
yeah.
I mean, it's incredible.
And how much is 5 gigajoule? Well, I'm an economist, I had to look it up. But if I go out and buy a dishwasher and a washing machine, I use it in a Westernly normal way for a year. That's about 5 gigajoule.
That's 5 gigajoules.
So, I mean, it's fair to expect that their average consumption is going to increase and add several hundred millions or more people in that region. That is going to build it up as well. But 1.5 billion more people on this planet in 25 years, that requires that we build a new India in 25 years.
Yeah, oh, absolutely.
If you start to think about that, what that actually means, that 1.5 billion more people that need food on the table.
Yeah.
Or a table at least to start with. Fertilizer, grain trade, and everything else that comes with that. They need somewhere to live, so you need to start building houses, and maybe from a simple level, but still, that means steel, cement, and gravel, and all of that, which not going to impact on the iron ore trade and coal. And then, of course, energy, energy for cooling or heating or cooking food or propelling your transport vehicles, and yeah.
That's an interesting thought, because I actually wanted to nudge you a little bit on that. If you think about the today's, and our listeners can also picture it, today's trade is very much Western orientated, with the East producing, West consuming.
Yeah.
But when we now talk about a growth where it's happening geographically, it's not really happening in the northern hemisphere.
No.
Much. It's the Latin America, Central Latin America. It's the continent of Africa. It's India. Well, arguably still in the northern hemisphere, but a lot more south. And then all of a sudden, those trade patterns that, as we know them, I mean, they no longer make all that sense because it starts to sort of work somewhere else.
I usually try to say that the center of gravity of economic activities is rapidly moving eastward. If you try to put a GDP central focal point on the planet, it's moving in a certain direction, and it's a clear direction, and it's moving eastbound, and then it started to move southbound. If you look at it in, let's say again, 25 years down the line. And with that comes who trades with what, with who. And that is changing. As much as I believe and love this part of the planet, Europe, we are not as important anymore as we maybe still think that we are and will be. We need to find another place on this planet to fulfill our function.
Yeah. Well, I mean, we're definitely not source of a growing demand. No. That's not. Perhaps we shouldn't call ourselves as a falling empire just yet. But it's certainly. I mean, I've spent a lot of time thinking about it, and yes, we do say, okay, it's 25 years from now. From some people, this is like, well, it's not going to be my problem. But some people, it's like, well, it's just around the corner. And then if you now start talking about new trade patterns, new trading partners. You immediately need to start thinking about, okay, what sort of ships? I mean, ship types probably won't change all that much. They may be modified, but certainly sizes, because what we have now is optimized for something different. And it's also, the power, because I'm going back to geopolitics, right? The power is within where the sort of momentum is, right? Those economies, and then and for now, the Eastern economies, the Asian economies thrive because of the quite a substantial, robust demand that comes from external world, right? But I mean, the more they grow, the more domestic support they get, and before you know it, I mean, things are just happening somewhere else. So that's something to keep in mind when you build your strategies for the next 5-10 years.
And if I may put it into a 500-year perspective.
Well, knock yourself out.
Yes. Go back before the industrialization. A country's GDP was pretty much equal to its size of its population, because every family produced what they needed to survive, more or less. very simply put. China was very big, for instance. And then we did a couple of smart things in the West, the spinning jenny, the steam machine, etc. We got a head start, and we conquered the world in a not very trade-friendly way, but we got in a head start. But the rest of the world is catching up quite rapidly, and then the size of the population is still sort of the balancing benchmark. Mm-hmm. So they are just coming back to their proper place on this planet. Yeah. We cannot change that. Mm-hmm. We need to adapt to it and find our role in that perspective. Do what we do best. The comparative advantages and all of that. Be smart, come up with the intelligent solutions, find trade, and new ways to cooperate. That's our role in the future. But the knock-on impact on what we are trading and what we are shipping is going to shift dramatically. Again, east-south bound. Intra-Asian trade, Asia and Africa and Asia and Latin American trade is going to grow quite rapidly. It's not going to cease in the other planet. And then you add the energy side to that. I mean, if we are phasing out fossil fuels, I strongly believe we're not phasing them out completely for various reasons. And you can see that...
Foreseeable future.
Yeah. But it's not going to grow, let's put it that way. Mm-hmm. And the transport of energy commodities, the fossil energy commodities, is about 40% of everything shipped worldwide today. So that's an important commodity for shipping. And if it stops to grow, maybe even decline at some point, could be around the corner, or it could go on for another 2-3 decades. Let's leave that. It's not a fastly growing commodity group anymore, and you start to replace it by something else, biofuels and renewable fuels, and maybe further down the line, possibly electrofuels to a grander scale. To me, that transition, first of all, it's not going to be one-to-one, because much of the oil is today consumed by the transportation sector, and we are electrifying that, maybe not at the pace that the newspaper headlines give an indication of, but it takes off the margin and then gradually eats into the consumption, which means that we don't need to transport refined oil products or crude oil to the same extent, and replacing it with either being electrified, which is a completely different thing, or biofuels to start with. And I think they are going to be produced regionally initially, not to be shipped across the deep sea oceans and longer hauls with VLCCs or the like. So it's going to be a transition that could mean quite a lot from an investment and shipping perspective.
That's true, because, I mean, when you look at the energy transport, especially if you talk about crude oil, I mean, you can't really modify those trade patterns all that much, because crude oil is what it is. And who needs it, then that's sort of constant. Products, those dynamics are different, obviously. It depends on how much refinery capacity you have. So those things are quite different.
Who builds a new refinery today?
Well, we need to go east. Right, so we already spent enough time on geopolitics, and I think we let ourselves a little bit more into the future. But then let's just step back a little bit and look at at the moment, the dynamics within the fleets. So where do you see basically fleets as we have it now? We know it's stretched to the limits due to several choke points and bottlenecks, right? Geopolitics, again, to a large extent. But how do you see the performance and perhaps the future development in between? If we just look into volume markets like the energy and bulk and container, let's just start with energy.
Yeah, let's start with energy. And we already spent enough time on the oil. Let's say that the oil trade, crude oil, refined oil products, is maybe not peaking, but plateauing.
At some point.
Yeah. Which means...
growing modestly.
Yeah, which means that the fleet will adapt to the demand. Trade patterns not changing rapidly there as well. The refineries are where they are, the sources are where they are. The dry bulk side of things is very much at the core of the build-up of, shall we call it, a new India?
Yeah.
To cater for 1.5 billion more people, because much of what is going to be needed will be affecting the bulk commodity trade. The iron ore is where it is. We have 2-3 major sources, and then of course you have a lot of domestic iron ore in China, but they follow the price fluctuations. And that has been the game. Coal trade, one is for steel production. We're going to need steel, maybe not at the same growth pace as we've had, but we're definitely going to need steel. Coal trade for energy purposes, well, the green side of me says we're going to stop using coal for producing electricity or for heating. If the economic side of me says,
good luck with that.
No way, yeah, good luck with that. It's abundantly available across the world, and all these less fortunate countries that are now growing rapidly and are going to need energy.
Cheap energy to start.
Cheap energy. This is
steam coal.
This is definitely a competitor, a contestant.
Although arguably, if I may interrupt you, it's an interesting thing with the seaborne trade because it kind of fluctuates up and down. In the past few years, we had this more like on the
It's
negative
not that
side.
much supply and demand that
Exactly.
directs that. It's more about the price level.
Yes, it's arbitrage.
And the one main actor on the buyer side, which is China, which they're the biggest coal producer on the planet, but they buy from abroad when the prices are attractive because that's higher quality grades.
Although it still is only a fraction of what they really produce.
Yeah. They produce, what is it, 3.7 billion tons per year, and they import whatever it is.
100 million plus, maybe. So,
a couple of hundred,
But you're right, bulk is definitely in the core, and then you mentioned that at the very beginning, when you grow societies, when you take them out from almost zero level, then you've obviously food, fertilizers, this is all, and then you get into shelters, homes, this is all almost entirely bulk.
Yeah. But then you have all the countries and societies, particularly in the Far East or in Asia, I should say, that already have started their development climb. We see the number of mid-income earners increase monumentally at the same time. I think we added a quarter of a billion of them in just 6-7 years, and we're probably going to add equally much, if not even more, in the next 25. They are going to demand more and more products that are mostly containerized, if they are transported anywhere, much of it intra-Asia. But also some will start demand what they still perceive as maybe attractive Western products as well, even though I think that is sort of fading away a little bit.
A little bit, yes.
Losing its glamour.
Yeah, exactly. But I was wondering where you were on the container side, because we added 250 million or so mid-class spenders, if I may say it. But it's not something that it just happened, because even when we talk in India, many people say well, India is a developing country. Yes, but because of the sheer size of this population, I've heard that there's about 300 million in population that actually represent the typical middle class as you would have in Europe. So there's been a demand for quite some time.
Oh, yeah.
And this containerized trade, of course, on the one hand, it will be stimulated by what you just said, a growing, basically domestic demand. But also, I know that this is something that you've spent quite some time looking into, cannibalizing in a way.
Oh, yeah.
Different cargoes, and even from bulk, isn't it, right?
Yeah, we've spent quite some time over the years with that. As a good illustrator, if you take the world fleet as an example of non-bulk ships, i.e. exclude the dry bulkers and tankers, left are the general cargo carriers, the ro-ros, the vehicle ro-ros, and the container carriers. And if you go back to 1970 or 75, if you look at the deadweight capacity of those fleet combined, the container share was 6%. Now, we are approaching 80%.
80%.
80.
Oh, wow.
That says something about where the development of the transports of non-bulk commodities and products,
That's incredible.
how that has developed.
Yeah, but doesn't mean we will be still on such a steep development, or perhaps...
No, I mean, the container fleet in our perception will continue to grow. And in comparison to the tankers, for instance, is going to be exceptional growth. In comparison to itself, it's going to be slowing down significantly, but it's still growth, which means that the containerized share of the world fleet is increasing quite rapidly simply because the tankers are not growing anymore.
Okay, so yeah, that's a one-player game in a way.
Yeah. And then who's trading with what? And if we, in the near term, very well could get back to a situation where transport in a container carrier will be very, very cheap, for reasons that maybe we'll get to later on, that will continue to attract cargo away from the other transport alternatives or cannibalizing it.
Cannibalizing. Well, I like that you mentioned for the reasons we may mention later on. Well, now it's later on.
Okay.
Because I wanted to sort of tease you a little bit. Okay, 2026.
Yeah.
If you look at the, especially in terms of the choke points and dynamics, I'm not asking you about prediction about possible peace resolutions, but where do you see those containers? Let's start. It's obviously the elephant.
Well, I mean, the elephant in the room is the passage through the Suez Canal, and I mean, we have already seen some focus on the container carriers alone. Seen a few passages by CMA CGM, maybe not for that obvious commercial reasons that you may think. We have seen statements by Maersk and a deal with the Suez Canal Authority. And I know from speaking to some of the operators that they say they will be fast followers. They will not be the first ones, and no one wants to be the first one to go, because the moment you return to the normal traffic through the Panama Canal, the Suez Canal and the Red Sea, with the Far East European trade, which is mostly the one that is there, you release some 11 to 14, 15% of the existing capacity on top of a situation with a fast-growing fleet in terms of new ship deliveries, and a situation that is already a little bit under pressure. And that, of course, supply-demand usually works. So in terms of pressure on freight rates, other than very, very short-lived for whatever disruption you can find, the direction is a bit of a given in my book.
Well, I mean, low rates is good for the trade, right?
In a way, yeah, definitely. In the short term, we're going to have 3-4 months with traffic congestions, simply because you have the ones going around and the one meeting the ones at the same time. It's going to be troublesome. Congestion against absorbs capacity, so it prolongs but the direction is given. Low rates attracts cargo, good for the one buying the cargo, but the one providing it are going to start looking at blank sailings or changing networks and alternating services or lowering speeds or whatever. So it's not all positive for the cargo owners either.
Yeah,
but lower rates usually wins. And at the end of the day, memory is short. The lowest option available usually wins.
And I mean, we always say it's a cyclical market, right?
Yeah.
We just don't like to be at the bottom of the cycle. Nobody does. But I think arguably in the container business, there's such a cash accumulation that, I mean, essentially, even if we have a short-lived crisis, which, looks plausible.
Yeah.
We don't know. It's like, they will be able to weather the storm quite well. And also what we may start seeing is the last subject I wanted to discuss with you is scrapping.
Yeah.
That's another elephant in the room. It's a room populated by a lot of elephants.
Yeah. Maybe I should leave now.
we have a fundamental problem because of all those disruptions. We kept ships going for so long. And,
scrapping has been extremely low in the late.
Literally didn't exist before. And then we have a burning problem because some people are under the impression that we actually make things better by replacing old ships with new ones, but we do exactly the opposite. It's not a speculation, it's essentially fact. And now in order to stop the world fleet from getting older, or which means to get into some sort of a sustainable renewal pace, as I would say, I mean, it's not going to take a year or two, and it's going to take a huge volumes. And I will let you talk about those volumes, but we did a few simulations ourselves, and then it's easy to tell you need to you need to start scrapping ships, but you need to first of all understand that the sheer size of that fleet is that you can't just go and say, well, just scrap them. It's just too many ships. So we talk about a decade of fighting that, let's say, the age of the fleet rather than a year or two. And I mean, I know you looked into the numbers, so where do you see where do you need to have that scrapping, to make a change?
Yeah, I mean, to put it into a perspective, we had a huge build-up of the world fleet in 2006 to 2012. Yeah. Right in the middle of there, we had the so-called Great Recession, which was very untimely when you build up the fleet in an exceptional way, and you have a huge drop in the middle of it. But there were 2-3 years there when we built or delivered more than 100 million deadweight a year of new ships to the world fleet, which is quite a lot. In recent years, I mean, I think in the past 10 years, scrapping has averaged on 20 million deadweight per year. We're much lower in the recent past. And we are approaching a situation where we will eventually start to meet these 100 million, 80, 90, 100 million deadweight per year. We don't have places to go. We don't have the capacity. Most of it today goes to India, Pakistan, and Bangladesh, some to Turkey. The green, whatever that is, scrapping facilities, there are about this many. Yeah. So there is a huge problem. Yeah. A huge challenge. And I think that we could expect that we take care of old ships very close to where we need scrap steel. India, China, good examples. Whether you also have the ability to build these kind of activities out nearby, for instance, the new building shipyards, etc. So you have a close cycle there. But it's not going to be easy.
It's not going to be easy. But speaking of making this a little bit easier, I recall what we discussed yesterday.
Yeah.
I need to check it myself, but I quite liked your argument when you said that we look at the existing fleet and we see like there's a huge problem. But you mentioned that you look into AIS presence.
Yeah.
And then there's some interesting numbers in it.
Oh yes, I mean if you. I quite often use that for smaller vessels. General cargo, which is a numerous fleet. Yep. Depending on whom you ask, it's 10,000, it's 20,000, it's 100,000 ships. Yeah. But we have seriously reduced the number of what we refer to an active fleet. So because at any point when I look at take all the IMO numbers of the general cargo carriers and look, how many of them do I see right now? Yeah. It's less than half of what I have on record. So, I mean, I'm looking at some 4,000 or 5,000 ships sometimes. And why is that? Well, of course, they could be deliberately switched off because they are inactive or in a scrap or in a shipyard, repair yard or whatever. But you don't have 8,000 ships in a repair yard at any given point. They could have switched to domestic-only services up rivers or between two islands within Indonesia, whatever. So they feel that they sold the transponder to someone else, paid $100 for it or whatever, Yes, but I would also argue that they are mothballed somewhere. Yeah.
Basically, they are somewhere that they don't even feel like they need to transpond anything. Cascaded down into the markets we don't even know they exist.
And we have a similar pattern when it comes to smaller passenger vessels, you know.
Yeah, oh, yeah.
Yeah, particularly the passenger only, you know, without any cargo deck or car deck. We have thousands of them, you know, that we don't see.
So perhaps when we look at just a planned fleet register, without mentioning any particular source,
Yeah.
It's not necessarily they are all active and participate in the international trade as they used to.
No.
Perhaps the fleet serving now is considerably smaller. Thus, indeed, the ones which gone dark, and I don't mean to dark fleet, but just basically they don't transport anything, which coincidentally are old vessels. They're not really something we should be that particularly worried about, and therefore perhaps we're not as old as we thought we were.
There you go. Yeah, in terms of numbers, yeah. But if we start to measure the average age in terms of capacity, and then suddenly we go back to what happened in 2006 to 2012 because they were all large ships.
They're all large ships. That's definitely.
And and they have not gone dark on the AIS, apart from a few tankers.
Yeah, apart from a few tankers. Chris, it's always a pleasure. I absolutely love discussing markets with you. Thank you for coming over to Oslo.
Oh, it's been a pleasure to be here, as always.
And I hope to see you again in our podcast soon.
Just call.
Cheers. Thanks.
Thank you for joining our videocast. It feels like we discuss so many topics, and yet there is so much more to discuss. Complexity is growing, pushing shipping to adapt at a rather fast pace. And the fleet, as we already mentioned several times, doesn't get any younger. Investing in new tonnage becomes more and more challenging. We will continue this discussion with our next guest, so stay tuned for the next episode of DNV Market Views. I want to thank Christopher Pålsson, the Managing Director and Partner of Maritime Insight, for a fascinating and stimulating discussion which I hope triggered some thoughts or reflection in the way you see the markets. As always, we encourage you to explore all the resources available on our Maritime Impact online platform at dnv.com/mi. Stay tuned for the upcoming episodes of DNV Market Views. Thanks for watching, and we'll see you next time.